Welcome back. I have breaking news to share with you guys because average rates just decreased to nearly an 8-month low. This is based on the latest data we have as of today, which is on December 27th. However, though, this has not translated into an increase in home buying demand overall across the United States here. So according to the Mortgage News Daily, as of today, which is December 27th, they're reporting that the average 30-year fix decreased to 6.61%. That's the lowest rates we've had going back to approximately mid-May this year. This is also approximately 1.4 percentage points lower than the peak we had about 2 months ago back in mid-October when the average rate was at 8.03%. For a 15-year fix, we're sitting at about 5.95%. Jumbo is at 6.95%, FHA 6.05%, and a 30-year fix for VA at 6.10%. So here's a look at that. Huge decrease in rates ever since really late October this year, and at 6.61%. That's the lowest rates we've had going back to approximately May 12th this year. Also, when looking at rates approximately 1 year ago, we were at 6.50%. So now we're only up by about 11 basis points, relatively flat compared to a year ago. Also, in looking at rates according to Investopedia.com, they're reporting that the average is at 7.06%. Again, this is people with exceptional credit overall and also buying their first house. And by the way, though, when looking at rates for a refi, the average rate is at 7.72%. The one reason why rates tend to be a little bit higher compared to the Mortgage News Daily is because they're looking at, or Investopedia.com is looking at a wider range in FICO scores, in the range of 700 to 760. By the way, you get the best rate if your FICO score is at or above around 740. Also, according to Freddie Mac, as of December 21st, the average rate, that's the average weekly rate, was at 6.67%. According to their chief economist, he stated the following: the 30-year fixed rate mortgage remained below 7% for the second week in a row, a welcome downward trend after 17 consecutive weeks above 7%. All right, so now we know that rates have been decreasing for approximately 2 months now. Let's have a look at some early signs of home buying demand. So this is according to the MBA, my mistake here, just posted on December 20th. Normally they post a weekly update regarding the number of people submitting loan applications to buy houses. This week, which is the Christmas week, they're off. So this is a report that was 1 week ago. I didn't share it with you guys yet. So this report here covers the week ended December 15th. It says the seasonally adjusted purchase index, which is a measure again of people submitting loan applications to buy houses, but it is seasonally adjusted. That decreased 1% compared to 1 week ago. So again, even though rates have been decreasing, applications fell by 1%. They're also 18% lower than the same week 1 year ago. One thing I do want to mention though, is that even though they decreased compared to the previous week and also is down by nearly 20% from a year ago, when looking at the trajectory over the past month or so, going back to early November, the index, again, seasonally adjusted, has increased by about 19%. One more thing to keep in mind, though, is that even though applications have increased by about 19% ever since early November, when looking at early November, that was the lowest levels since approximately 1995. So more than a 20-year low back in early November. So of course, it makes sense that overall applications have been increasing ever since then, especially given the fact that rates have been decreasing as well. But overall, we're still down by about 18% overall compared to 12 months ago. So here's a chart showing just that, the rise of applications ever since the week of October 30th. has been rising from about 125.2. Now it's at 149.6. So applications have been rising over the past couple months here, but again, we're still down compared to a year ago. And also in October 30th, that was the lowest levels since approximately 1995. As you can see right here, applications falling big time starting in 2022. And zooming out over the past 3 decades here, you can see that applications have been decreasing big time ever since early 2022. Going back to the MBA's report here, according to their chief economist, he stated the following here. With the positive news about the drop in inflation and the FOMC projections proclaiming a pivot towards rate cuts, this is a way of saying that the Fed just announced about 2 weeks ago that they plan to cut the federal funds rate 3 times in 2024 and to have further rate cuts in 2025 and 2026. And because the Fed announced that, this is one reason, or one of the main reasons, why mortgage rates have been decreasing over the past couple of months. I should say, coupled with the fact that we have been seeing signs that inflation is also winding down as well. He says, at least as of last week, borrowers' response to this rate move, rates decreasing to 6.83% according to the MBA, was rather tepid. VA refinance applications jumped 18% for the week, but otherwise, both refis and purchase applications showed small decreases. Something also that just really caught my attention as well, this looks at the total number of applications to buy houses plus refinances. So when looking at total applications, the share of people submitting loan applications for refis increased to 39.7%. That's an increase compared to the previous week when it was at 39.2%. So a huge increase of refis at approximately 40% right now. All right, let's change gears slightly here and look at some more leading indications of home buying demand due to rates decreasing for about 2 months now. So overall, because rates have been decreasing, again, we're not seeing a huge increase of applications last week at least. And on top of that, we're not seeing a surge of pending home sales, which of course is a measure of contracts being signed between buyers and sellers of existing houses. This is according to Redfin on their data center. This is a look at pending home sales this year, which is in blue. Last year is in black here, and in orange is 2021. In red is 2020. So right now, at least for the 4 weeks ended December 17th, the number of pending home sales decreased by 7% compared to the same time frame in 2022. On top of that, when looking at about 1 month ago, which is right there, we were at 6.5%. 1 month prior to that, we were at down approximately 6.5% as well. So the number of pending home sales is actually lower right now compared to the previous 2 months. In other words, we're not seeing a surge of contracts being signed because rates have been decreasing. On top of that, the number of people searching for homes for sale on Google, this is looking at Google Trends. The index right now for that is at 58. 1 year ago this time, it was at 63. So fewer searches for homes for sale on Google compared to 12 months ago as well. On top of that, according to the National Association of Realtors, for the number of real estate showings nationwide this November, it actually increased only 2% year over year. Of course, every real estate market is different though, right? So what's happening right now at a national level, of course, varies depending on the area you're interested in. So breaking this down in the 4 major US regions here regarding the number of real estate showings across the US here, 2 of the 4 regions saw an increase in showings on a year-over-year basis. That was in the South, an increase of 10%. Also the Midwest rose by 3%. In contrast, home showings decreased in the Northeast, falling by 8%. And also in the West, it decreased by 6%. And here's a map showing just that. The West falling by 6%, including Alaska. Also the Midwest and the South increased whereas the Northeast fell by 8%. And lastly, let's have a look at the number of real estate showings across North America according to showingtime.com. So for the week ended December 14th, the most recent data we have from them, the number of real estate showings decreased by 37.9% compared to the first week this year. At this time last year, it decreased by 45.1% compared to the first week last year. So to briefly summarize today's video, we're not seeing a surge of activity due to the fact that rates have decreased by about 1.4 percentage points over the past 2 months. What I will say though is that during this time of year in December, our housing market is virtually frozen because a lot of people don't want to list their house for sale during the holidays. And of course, a lot of people don't want to move during the holidays either. So we're seeing during this time of year, we see a decrease in the number of new listings as well as the number of contracts being signed. So I'll definitely keep you posted with the latest developments because what I'm hearing with ears on the ground here is that we're going to see a bigger increase in the number of people listing their house for sale to start the year. So I'll definitely keep you posted with the latest developments because if we start seeing a surge of new listings, of course, that's going to change our environment of our housing market greatly because frankly, we need to see housing affordability improve. And the main driver of that, of course, is supply. If supply increases greatly, that'll decrease prices, making housing affordability more affordable, with lack of a better word. But what's your biggest takeaways from today's video? Like and subscribe. Hope you have an awesome day. I appreciate you, and we'll see you in the next video.